kuwa. It can be. Ndoto zetu zote zitakuja kuwa. Hadi tufike kilele, hadi tufike kilele, hadi tufike kilele. We're a nation of dreamers, na ndoto zetu, mafanikio yetu.
Stanbic Bank, it can be.
Good morning, ladies and gentlemen, and welcome to the Stanbic Holdings PLC half-year results presentation. On behalf of our board members, our executive team, and our staff, we want to thank you all for joining us digitally this morning and allowing us to take you through our journey and our financial results story. As you're all aware, the COVID-19 continues to spread globally. And as an organization, we continue to ensure that we prioritize your safety and well-being of our stakeholders and the reason why we are holding our event virtually. This meeting will be held in English and we are accompanied by our sign language interpreter in order to support the linguistic identity and cultural diversity. We are streaming live on our Stanbic Bank YouTube and Facebook platforms. And to follow the conversations and engage with us, you can follow the hashtag Stanbic Half Year Results 2021. That is hashtag Stanbic Half Year Results 2021. To take us through the Stanbic financial results this morning, I am joined by Stanbic Bank Chief Executive, Mr. Charles Mudiwa, and our Chief Financial Officer, Mr. Abraham Ogenge. To officially kick off, please allow us to take you through our 2021 half-year journey through this video. Let's follow the story.
Every year begins with tangible hope. 2021 was no different. Stanbic Bank hoped to top the 11.2 billion revenue reached in 2020 and committed to further our support for corporate social investments worth 240 million shillings. During the COVID-19 period, our efforts continue to focus on ensuring the safety and well-being of our staff and customers, as well as putting systems in place to minimize business disruption. As a bank, we acted quickly to respond and restore services. At the beginning of 2021, the bank focused its efforts on helping Kenyans rebound and enable them to achieve their dreams and ambitions through the launch of a new brand campaign under the slogan, It Can Be. It Can Be is about our shared value. We are a Kenyan bank that believes in growing ourselves, our staff, our clients, and the community. Responding to our clients' needs and the changing operating environment, we enhanced our digital solutions and launched new digital innovations. We launched a fully digital account opening and lending on our mobile app. We launched a mobile app to help Tamas manage their finances, a platform to allow traders to trade in Forex on their phones, a fully digital insurance solution called StanSure, On our commitment to support our customers' growth, we have continued to issue waivers on digital banking transactions, saving Kenyans a total of 101 million shillings in the first half of 2021. Disbursed digital loans of over 3 billion shillings through our mobile app since its launch in April 2021. For our SMEs and dadas, we aligned with the government and committed 3 billion shillings through the Credit Guarantee Scheme to enable access to affordable credit. Provide financial support for over 20,000 women-led businesses through Dada. Disperse 9 billion shillings to distributors, bottlers and the oil and gas sector through MJEKI. To support our corporate clients, we provided insights and analysis to the public on the country's economic performance through the Monthly Purchasing Managers Index. Support in structuring and implementation of complex transactions for our clients, including debt arranging, loan syndications, capital markets, and advisory service. On sustainability, we were the lead arranger and placing agent of Kenya's first ever green bond, which closed the final tranche in July with an aggregate subscription of 2.096 billion shillings against the targeted 1.438 billion shillings. In light of COVID-19, we continue to partner with government and private sector to tackle the efforts of the pandemic that have affected Kenya and the entire world. We facilitated cancer screening in 5 counties. In line with our education pillar, we spent 3 million shillings to support the education of bright students. To improve the capability and capacity of SMEs, the Stanbic Foundation, the Ministry of Industrialization, Trade and Enterprise Development, and Microsoft launched the Future Need Digital initiative, where we trained over 5,000 SMEs in 6 counties across Kenya with the skills they need for a digital marketplace. To improve SME access to funding, USADF and Stanbic Kenya Foundation will provide a total of $10 million in funding towards this initiative, targeting 100% Kenyan-owned, managed and legally registered MSMEs in Kenya. We are proud to have been carried through the first half of 2021 by the resilience of our staff, our customers and our partners. As a result, we made a total revenue of 12.4 billion shillings with profit of 3.5 billion shillings after tax. Our customer deposits were recorded at 229 billion shillings with over 165 billion shillings issued in customer loans. We have weathered the storm with grace and 2021 is looking brighter. Kenya is our home. We drive her growth.
Once again, welcome to the Stanbic Holdings PLC 2021 half-year results. As we move on, please remember we have our hashtag. If you want to follow the conversations, the hashtag is Stanbic Half-Year Results 2021. Again, the hashtag on our social media platforms is Stanbic Half-Year Results 2021. And now to move on to our presentation, allow me to kindly introduce our Chief Executive, Charles Mudiwa. Charles, welcome.
Thank you. Good morning, and thank you very much for joining us today, and we really appreciate you joining us today as we announce our half-year results. As Catherine has already indicated, COVID is still very much with us and continues to be a dominant feature in our reports, in our businesses, and indeed in our daily lives. As we look at the operating environment, we are currently dealing with wave 4 that we have seen dominated by the Delta variant, and we are all very cautious of the impact of this variant on our lives. As a result, we are doing this transmission digitally so that we can all be safe and also in line with the guidelines issued by the Ministry of Health. Talking of COVID, the bank continues to manage COVID cautiously. We continue to have our staff working from home where necessary, and those who need to be in contact with customers and to come to the offices are fully protected by providing all the necessary gear they require to be protected. We continue to sanitize our place of work and any places that we engage with so that we can ensure that our staff, our customers, and indeed the broader community that we work with is safe and protected. And we want to thank you all for cooperating with us, particularly those customers who use our facilities. When you walk in them and we take your temperature, ask you to sanitize, keep safe distances. We thank you very much for cooperating with us and ensuring that our nation is indeed safe and that all our families and our relatives are all safe as we combat and fight this pandemic. Coming to the economy, interest rates remained flat largely during this period, and we've seen a continued resilience and indeed the emergence of green shoots in the economy as we all start to grapple and understand how to navigate and manage our businesses during the COVID period. And we want to say thank you to our customers for continuing to support us, to be resilient and work together as we navigate a difficult economic environment, not just in Kenya but globally. But we have shown that together we can collaborate and indeed show growth and aspirations. Of course, we are now looking at next year, and the political environment is shifting into the election mode, and we will all continue to monitor this process closely as things unravel. Now, recapping our strategy, we continue to be focused on Kenya is our home, and South Sudan as well, which we look after, is our home, and we drive a growth. And this is something that we've demonstrated over 100 years of existence, and we continue to drive this agenda of developing and growing our country and contributing to sustainability development in Kenya and in South Sudan. We also continue to focus on being the leading financial service organization, particularly focusing on ensuring that our client experiences and value that we give to our clients is there and is demonstrated. We focus on our key strategic areas, which is around improving the experience of our clients, executing exceptionally well, and ensure that we drive sustainable growth and give value to our customers as we have always shown in. We will embed agile ways of working. We ensure our systems are always on and secure for your safety. And that, of course, we've got our 6 value drivers, which speaks to our focus on our customers, how we engage with our staff and employees, how we ensure that we've got the right risk and conduct, and our operational excellence, good financial outcomes, and ensure that we have a positive impact in our economy and our social and economic environment indeed. Next in line with this is that we also adopted a 2-step strategy, one where we will focus, number one, on giving value and strengthening our existing business. But at the same time, recognizing that we live in a changing world, we will focus on transforming the business to grow scale, but also provide more digital solutions and indeed ensure that we create sustainable partnerships with different agencies that require to show growth in our business. And you will see evidence of this as we start to explain some of the things that we've done and the results that have come through from our highlights in our business. What are the key highlights for the quarter or for the half year? From a digital solutions point of view, we rolled out our digital lending capability, and we want to thank our customers who welcome this overwhelmingly, and we've seen to see them taking up a lot of their businesses there. As a result, turnaround times have improved from 3 days in our mutual loans to almost instant, and we want to say thank you to our customers for this. We also rolled out our customer onboarding digitally. To date, 90% of our customers are actually onboarding themselves digitally. And this also has improved the turnaround time in terms of digitally onboarding yourselves and the time that you require for you to open an account with us. We've seen as a result a 400% increase in the number of accounts opened per day as a result of this process that we've done. We launched our insurance app, StanSure. We also want to thank you, our customers, for welcoming this development, as you can now renew your insurance, particularly your motor vehicle insurance, on your own without having any hassles. It has many other features that include the ability to have SOS should you be in crisis, and we'll be building more and more functionality into this capability. So as we transform our business, launching new digital solutions, we also want to thank you for welcoming us, but also taking these initiatives and actually using them as they're designed for you. From an employee-focused point of view, we continue to manage our COVID awareness. As I've highlighted at the beginning, we're very concerned and very much aware of the importance of the wellness of our staff, our customers, and everybody else who engages with us. And to this extent, we continue to drive awareness around COVID-19. We continue to take all the steps that are necessary to ensure our staff are protected. And where we don't need staff to come to the office, we continue to encourage them to work from home. And we will continue to work on this. In this regard, we're encouraging all our staff, and indeed the whole nation at large, to get vaccinated as much as you can. And those who can get access to the vaccine, please do go and get vaccinated, as we believe it is the only way we can win in fighting this pandemic. From a client experience point of view, we want to say thank you to our customers. You've given us positive feedback, and your comments about how you want to interact with us have been welcomed, and we want to say thank you for continuing to support us as we improve our client experience. Key awards that we've won: we continue to be the best investment bank in Kenya on the back of some of the transactions we've done, that we continue to do. And want to say again, thank you to our customers for supporting us and giving us this accolade. Belongs to you, not to us. With Dada, we celebrate second year of Dada, and we're very excited to see the growth in this particular portfolio and the support that the women customers have given us. And we are working towards improving your experience, and we'll continue to support your business. And to date, we've got 19,000 women who have joined us, over almost close to 2 billion loans that have been given out, and we continue to grow this portfolio as we go forward. We've continued our partnerships, our landmark deal with Nissan that we signed, and want to say thank you to our partners who've worked with us. We continue to work with our markets. We did a market storm in Nakuru, and we are continuing to work with the different counties across the country to support the women traders, but also general traders in those markets. And we will continue to work with our communities as we improve our business. Now, what does this all mean? And we look at the results and say, what does this all mean and how did we deliver? The first thing that I want to say is we believe we delivered a very strong, solid performance in the first half of the year. Our PAT went up by 37%, driven by revenue growth, lower impairment charges, and tax adjustments. And we want to say thank you to our customers for supporting us. Thank you all the stakeholders, our regulators who have worked with us during this period. Our return on equity moved to double digit at 11.8%, and we want to say thank you for that. We also had better asset quality. We saw our NPLs are moving down from 10.919 last year to 9.87, single digits, and we are quite happy with the direction our NPL provisions are. Our credit loss ratios also went down from 2.5 to 1.71. And we want to say thank you again to our customers for supporting us and working with us in improving the portfolio quality, and therefore strengthening our bank and making your bank a much better organization that it is. As a result of that, as an acknowledgement of this performance and acknowledgement of the improvement that we see in the economy, we have resumed our dividend for our interim session. As you remember, last year we suspended the interim dividend because of the uncertainties that we felt due to COVID. But this year we've resumed this dividend, and we want to announce that we have an interim dividend of 1.7 shillings, up from, of course, nil that we issued last year, as a result of saying thank you to our shareholders for standing by with us and being with us during a difficult period, and we continue to do that. Lastly, I just want to say our strategic priority is to transform this business into a platform business. We will continue to invest in it to build a future-ready organization that is truly digital, but also truly human. And therefore, year on year, we will see this growth, and you'll see this growth in investments, particularly from a cost point of view, as we put more money into our technology to make sure that we're a future-ready organization. I want to say thank you very much for supporting us, being with us, and we continue to ask you to be safe and to continue to support the government and indeed the whole nation and the world in fighting the pandemic. We will do our part, and we thank you for the work that you've done so far, and we want to say thank you very much. Asante sana. It is now my honor to introduce our Chief Financial Officer and Value Officer, Abraham Kenge, to walk you through the financial details in detail. Thank you.
Thank you very much, Charles, and good morning, all of you joining us digitally. I will now take you through the numbers with a detailed analysis of how we've performed in the half year of 2021. From a highlights point of view, you would actually see that our profit after tax, 3.5 billion. This represents a 37% increase year on year. Revenues, double digit up to 12.4 billion odd. Our return on equity, as Charles has talked about, 11.8%. Our cost to income ratio continues to be below 50% at 48.8, and our earnings per share healthy at 19.82. We've also seen a strong balance sheet with our customer loans at 165 billion and our customer deposits at 229 billion. I shall now walk you through the story behind the numbers. Just thinking about how we've performed and how we've transitioned over the year 2020 and 2021, we have seen improvement in our margins. We have seen our non-funded income also growing. We've seen a reduction in our credit impairment charges, and we also continue to build a future-ready organization, which is reflected by some of the investments we have made in terms of our operating expenses. If we then go further into our margins, you would see that our margins have been boosted largely by the change in our funding mix. We have reduced the cost of running our business and funding our business by repaying some of the expensive deposits, growing our local currency balance sheet, and also growing our current and savings accounts, which then helps to boost and reduce the cost of funding. We've also improved on our efficiencies, and this has also helped us to reduce the level of our non-earning assets as we increase our operational efficiencies in transactional processing. From a fee point of view, you do know that we've continued to extend mobile fee waivers for our customers, and we've extended about 101 million of that in the year 2021. But this has also been offset by an increase in investment banking deals as we continue to support our customers who are resuming the agenda of driving growth of Kenya. We've also seen a decrease in global restrictions, which has then resulted in trading finance revenues increasing year on year, and also our customers partnering with us for their various foreign exchange needs. Our asset quality has improved. We've seen a reduction in our non-performing loans. This is largely as a result of proactive engagement with our customers, understanding where their challenges are, and allowing them to actually manage their businesses in a manner that would enable them recover. But we've also seen better asset quality as a result of a generally improved macro outlook. We've looked at our various systems and improved our collection strategies, which has helped us ensure that our book continues to remain clean during the period. We've talked about operating expenses, and this does reflect two things. It reflects our continued investment in new technology to a future-ready organization, but it also means that we continue to invest in our staff and in acquiring appropriate talent that can be able to support our customers' grow. Our customer loan growth has been targeted, and it is well diversified across various sectors. We've seen very good growth as we continue to celebrate our partnership with our women in our flagship value proposition called Dada. We've seen a year-on-year growth in trade, and we've also seen margin improvement across client segments. Our deposit growth remains well above the full year 2020 levels, and we are seeing a gradual increase in this. What is actually also quite pleasing is that our customers have continued to trust us for their transaction needs, and we have seen the non-paying liabilities growing year on year as we continue to optimize on the interest-paying liabilities. Our funding and liquidity remains strong. Charles has talked about our dividend payment. We are confident that we will be able to sustain our growth, and we'll continue to invest as our capital remains quite healthy at 18.1% on a total capital view against a regulatory requirement of 14.5%. Lastly, just to give you a highlight on the various subsidiaries, all subsidiaries continue to show strong performance aligned to market opportunity. We've seen Stanbic Bank branches reporting 3.3 billion. Our South Sudan business showing the resilience with an over 100% increase in profitability. Our bank assurance intermediation continues to show good growth with a 68 million, 94% up year on year, and SBG Securities remaining resilient given the slow recovery of our securities exchange. We are confident that this does show an outlook that is quite positive for the next half of the year 2020. Thanks very much for your time. I'll now take this back to Catherine. Thank you.
Thank you very much, Charles. Thank you very much, Abraham. It is indeed a great opportunity for us to understand the Stanbic Bank, Stanbic Holdings half-year results. Ladies and gentlemen, we have come to the end of our virtual meeting, and on behalf of Stanbic Bank, would like to thank all our guests for taking time to join us this morning. It is our absolute pleasure to have you, and thank you for being with us. For our media stakeholders, the question and answer session has been organized right after this live stream. Please join the link that was shared with you earlier, and we will engage in terms of question and answers. So ladies and gentlemen, Stanbic will continue to move forward, like you've heard, with our purposeful strategy to drive Kenya's growth. We will continue to actively seek opportunities to partner with businesses and individuals to unlock their potentials and contribute to the economy. So ladies and gentlemen, thank you once again, and keep safe.
We're a nation of dreamers, believing in our dreams. Tukiamini sote, tutafanikiwa. Ndoto zetu zote zitakuja kuwa. It can be. Ndoto zetu zote zitakuja kuwa. Hadi tufike kilele, hadi tufike kilele, hadi tufike kilele. We're a nation of dreamers, na ndoto zetu, mafanikio yetu.
Stanbic Bank, it can be.
We're a nation of dreamers, believing in our dreams. It can be. Kila mmoja wetu ana ndoto zake.